गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है। पैसा बोलता है में फिर से आपका स्वागत है। मैं स्टार्टअप्स के बारे में बहुत बात कर चुका हूं और एक स्टार्टअप के स्टोरी के बारे में आज बात करूंगा। ये कंपनी तो पब्लिक नहीं हो पाई, अभी भी वेंचर कैपिटल पे डिपेंडेंट है। और अभी जो बोल रहे हैं फंडिंग विंटर आ गई है, वो फंडिंग विंटर का मतलब क्या है, ये मैं आज आपको समझाऊंगा। Today, I want to talk once again about startups, but this time I'm focusing mainly on a startup which is still dependent on venture capital for money and private equity. All these companies are now experiencing what is called as funding winter. So I thought I'll explain to you what is funding winter and what is going to happen. Will the funding winter end soon? And how will this impact the Indian economy? At the end, I will also touch about a company which was profitable but has now sunk and there is no way it's going to survive. So let us now look at all this. Let us examine the effect of this funding winter on India and especially Bangalore. Today I'm going to talk about a company called Cars 24. If people have watched television over the last 2 years, you have seen an enormous amount of money splurged on Cars 24. The advertisement was slick and very nice. Basically, what they were trying to do is try to take the dealer out of the second hand cars. They would play the role of the dealer, they would buy cars and sell cars and make money on it. The technology was supposed to be a disruptor. This is something similar to car trade. Car trade was first off the block, it went public and is now going down slowly. This company was still burning cash and was started by a man called Vikram Chopra. Now, what did he do? He decided to be slightly different from car trade. He said he will operate in global markets also. So he formed five core markets other than India. The markets were Saudi Arabia, Indonesia, UAE, Australia, and Thailand. Now the news comes he has vacated two markets. One is Indonesia, another is Saudi Arabia, and says he will focus only on Thailand, Australia, UAE, and of course India. This is what is the problem. The problem is when they have too much money, they don't know what to do with it. So, Cast 24 opened in Indonesia in 2022. Global business for Cast 24 was 20% of the revenue. And so, if 20% revenue, you sacrifice two of the five, you are basically giving up 40% of that 20% market. What is the reason for this big fall? Is basically what has happened is the cash burn has hit Cast 24. They have decided to sacrifice two markets. For the financial year 21-22, the loss is 1,834 crores. For 22-23, the results are not there. For 2021, the result is 220 crores. So you have already lost 2,000 crores. And last year, you would have lost at least another 1,000 crores. You have burned 3,000 crores and you are nowhere near profitability, nor are you showing any signs of recovery. This is where funding winter hurts. All this while, money was available freely from people like SoftBank and other private equity players. Warren Buffett rightly taught us that private equity is akin to fraud. Basically, it was a cabal or a club of investors who were passing companies among each other. And since valuation of private companies is left to their fancy, they were passing the parcel from one to another, every time increasing the value. These companies were never making profits. If they came to the public open markets, then the markets would have scrutinized them and punished them, like they have punished Uber. Uber is nowhere near its listing price and all the hype is over. The only question is when Uber is going to close down. Therefore, clearly, Cars 24 never had any intention of becoming profitable. The whole idea was to build up a huge turnover, use cheap capital, burn it up, and then sell it through an IPO and exit. Unfortunately for them, a funding winter came along. What do I call funding winter? Okay, first we have to understand how private equity gets their money. A lot of rich people in America have millions of dollars of assets. They would pledge a portion of those assets to the banks and raise money against it for less than 1% interest per year, which is nothing for them. They would give the money to private equity investors who would play passing the parcel and promise astonishing returns to these wealthy individuals. Some of them did make this money, and when they saw this kind of money making, they decided to put more money. In the early years, Facebook was an extreme success, Alibaba was a success, Twitter was a success. When these kind of successes came in, then this model was touted and more money went into sick companies. SoftBank's one major success was Alibaba. and all others after that have been mega failures. Of course, he has a crown jewel ARM Holdings, which is he is going to sell. ARM is a microprocessor company which was existing even before SoftBank came. SoftBank just bought that company. What I'm trying to tell you is the private equity investors were only worried about turnover and trying to dump it on the next guy as long as the music played. All this foundation was that rich people could borrow money at very cheap rates. When the pandemic happened, with the money instead of going only to the rich, went into everybody's pockets via transfers from the government. This led to inflation and supply chain shocks. What has now happened is inflation genie is out of the bottle, and the Fed and the European governments have had to act to bring down the inflation. So they have increased interest rates in 14 months from 0 to 5 to 5.25. This has hurt the profitability of banks. In fact, three banks have gone down, more are expected to follow. Most of these banks have been lending to private equity players or even new technology companies. Now, with more banks falling by the wayside, cheap finance is no more available. And because cheap finance is no more available, private equity investors have pivoted, asking for numbers, costs, and profits. This means they will not fund companies which are not profitable. Therefore, companies such as Car24 are being forced to downsize and hope to survive this winter till another Christmas father comes and Santa Claus comes and hands them more checks and more money to burn. But I don't think that is going to happen anytime soon. We already know Byju's is in serious trouble. We know that Zomato is in trouble. All these companies have to come to a sad end. Oyo has cut its draft DHRP and filed it for the third time, and the IPO size has come to one third. Basically, when they wanted to raise 100 rupees, now they have come down to 30 rupees. Only the fools will supply money to Oyo because Oyo has no business model. Another company which has been in the news is Nika. When people ask me, I said buy it in the IPO and sell it immediately after it. You will only trade for the bounce because you want to. Nika's entire year's profit was only 3 days' profits of ITC, yet it had astronomical valuations. It was ripe for short, and the market has now realized it's already lost 60% from the time it listed at its high, and year to date, it has lost 60%, and in the last 6 months alone, it has lost 25% of its value. Not only that, Reliance has launched into the same business and has taken out all its executives at very high prices. Some of these stock prices may bounce in the short term, but in the long term, the funding winter is going to continue. As long as they have no idea of when to make money, these companies will not survive. It's only a matter of time before they go down. Look before where you leap. Please don't subscribe to the IPO with the new age companies or buy them. I see a lot of them in your portfolios. Please don't lose your hard earned money. Thank you for supporting पैसा बोलता है. पैसा बोलता है को सपोर्ट करने के लिए मैं आपका आभारी हूँ. If you like this video, hit the subscribe button, turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Paisa Bolta hai.